There's 10 mistakes that people typically make when they're purchasing car insurance. And today we're going to go over the most complaints that you'll see in the insurance industry and the mistakes that people make when they don't plan ahead. If you're looking for car insurance, I'll put a link in the description below. If you're looking to work with an independent agent, one of the solutions to most of these is to shop with multiple companies. Independent agents can do that. So you have one person that understands your situation. They can shop all of the different policies that are optional for you. The first thing that people don't realize is the increase of a policy. Now, previous to 3 years ago, the typical increase you would see would be about a 3 to 5%. It's essentially inflation. The cost of insurance will go up because the cost of medical, because the cost of materials, all those things. But more so recently, in the last 5 years, we've seen a major increase where even the last 3 years, we're averaging about 20% of an increase because insurance companies are usually the last to react. They typically want to keep rates as solid as possible because we all know if the rates go up, people start to shop. And they don't necessarily want customers shopping. They'd rather take the hit and assume that the following year was going to get better. Unfortunately, weather-related claims and coming out of a pandemic several years ago, people forgot how to drive. There was a lot of situations. Getting materials is harder. Now with tariffs coming up, there might be more costs there. And in general, everything has increased in time and in money. So insurances have held on as long as they could, but because they tried to hold on, they didn't realize that this was a 3 to 4 year process. You're seeing a large increase because of those scenarios. So if you're shopping for car insurance, just keep a mental note that you may see a 5 to 10% increase on your next policy. If that is the case, there may be a better fit for you with a different carrier or company, depending on your situation. Again, I'll put the link in the description below if you are shopping for insurance. The second is the claim denial process. A lot of people are realizing that they're not covered correctly, unfortunately, when it's too late. So when you are purchasing a policy, make sure that your agent has your best interest in mind. Most people say, I want full coverage. Technically, that doesn't have to include collision. It's your responsibility to read the policy to make sure it has all the coverages. Now, yes, you could hire a lawyer and go through that process, and this channel has a lot of stuff that goes over that stuff. But in general, what happens is when you don't disclose drivers, if you're doing some type of ride share or food delivery, and the company doesn't know it, there's extra inclusions or endorsements that you have to add to your policy to have coverage for those scenarios. Not all companies even offer it. I've got several companies that do really good with it. We've got several companies that don't even let you do it. So if you have those pieces, make sure that you're with the right company that's going to cover you correctly. This essentially leads to frustration, claims issues, denial of claims, all of those pieces to where you thought you were covered and you were paying X amount for a certain period or coverage. Now you don't have any coverage for that. You go to file a claim and you have nothing, and you've now lost thousands, if not tens of thousands of dollars, if not hundreds of thousands of dollars, depending on the injuries and whatnot in those claims. That's the biggest cost factor that I see people don't understand is exclusions from actual policies. The third issue is 12% of most complaints online are because of lowball offers. Insurance companies are a business. Some are a little bit scammy and some are really good at taking care of the customer. One of the pieces that's an endorsement with most carriers is having what's called OEM, original equipment, I think it's manufacturing parts on your vehicle. Usually your foreign cars like Honda, Toyota, anything that's shipping from overseas, you want to have that added if there's a possibility that those repairs are going to be expensive because you're going to get the Napa version of a part. Now, don't get me wrong. The Napa versions of parts, the aftermarket pieces that other companies make, sometimes make a better part. So it's not always the bad scenario to have that option. But when companies are repairing the car, they're not going to go with the most expensive part because, again, this is them trying to mitigate or make sure that they're not paying more for a repair than they have to. Some companies use used parts because you have a used part on your car now, they'll replace them with used parts. And when you get into that battle or that conversation with an underwriter or a claims adjuster or someone trying to fix the car correctly, sometimes you have to have those arguments. And sometimes the carrier, depending on which ones you go with, will just take care of it automatically. That's one of the reasons people say you get what you pay for. When you pay a lower premium, the lower cost policies, they're usually because there's something not taken care of with your higher premium company, where those preferred type companies are just going to pay the bill, walk away, and give you the best experience possible, where the other companies are going to try to give you the best experience, but within the budget that they've set. for you. Also, you'd be surprised at how often they total your car when you think that there's nothing wrong, because it costs more to repair the car, sometimes as much, than it is to go through the claim and just pay off the car. There's always unexpected repairs. You just don't know when there's an accident what could pop up. And if there's a common vehicle that has that issue, there's a good chance they're just going to pay you what the car is valued at. And that's a whole nother video on its own, but essentially the value price, there's about 12% of people online complain against either the repair cost and the actual cost of the vehicle or the value of your vehicle when you have a claim. That it leads into the fourth mistake people don't realize with car insurance is the time it takes has increased. In the last 3 years, the lack of mechanics, the cost of materials, the getting the right materials, metal for some reason on some of these car parts are near impossible to get. So when you have special sensors and special things on this vehicle, then it could be a vehicle that is going to take an average of 20 to 30% longer to repair than you would expect. A lot of it has to do with either the mechanic or the body shop willing to work with an insurance company and do all of the fighting back and forth. And here's the price, here's the part, here's what we should do. That's part of it. But the other part is just getting the materials. That is the longest part. It's also 22% of the reasons people complain online is the time it takes to repair the vehicle. It's just increased. The medical, it's increased. The cost of all of that and the time frame is a large factor now in insurance. The fifth is the one I think is one of the more important piece. I think this determines the carrier or the company that you're working with based on what they're going to do with you. And it's the lack of customer service. Most people don't realize that a lot of these carriers, in order to cut costs, have cut down on the amount of people that actually service your policy. So when you call in and you have questions, you're on hold for 20 minutes, 45 minutes, the person's not calling you back, this, that, and the other. That's when you get what you pay for sometimes, because you're paying for a lower premium. They've got to cut out the cost of that somehow. Have you ever heard someone say they're scammers or they're a horrible insurance company, never go through them? That's part of the reason. If the service level isn't to your standards, then the company that you're with, yeah, maybe the budget might be good, but you're paying for that service person on the back end. That's another reason working with an independent agent is a nice benefit, because if you have a friend or someone that does insurance and you trust them, or you're going through the quotes that I mentioned below, if you're working with that independent agent, they're usually going to be the first point of contact for you. Yeah, sometimes they're going to have you call the carrier directly. At the end of the day, they'll have your back to where if you're having trouble with claims, you call them up and they can get involved if need be and start to try to re-up that conversation so that you're not being left behind. Honestly, the biggest thing is not knowing what's happening, especially during a claim. That's the most frustrating part. The industry in general has had a dip in people that are becoming insurance agents and underwriters, and because they're afraid that AI is going to take over their job anyways, that is a big piece that this industry is lacking. So when you get to a claims adjuster, sometimes they get twice the workload than they did several years ago. Again, that's having to do with what you're paying for the insurance partially, but also the ability for that company to work really well. Let me know in the comments below if you guys have had that experience, whether it's been good or bad with a specific company, whether it's claims or just asking questions about your insurance. It's very important for us to know which companies are doing well. The sixth mistake that people don't realize is going to happen is unexpectedly being dropped from your insurance. It's called a non-renewal. And this can be even for good drivers. You could have gone 20, 30 years without a claim. You have one claim and all of a sudden they drop you. Part of it is because a lot of these top tier companies, they're looking for the best fit for their agency. And when you start adding medical claims in and there's a $30,000, $40,000, $50,000 claim, they can realize that they're never going to recoup the money. And at the end of the day, it makes more sense to drop you than to show you the increase. Most companies will give you the increase and let you see the $8,000 bill that is not going to be, obviously you're going to switch, you're going to start shopping, and they know that. But that leaves a little bit worse taste in their mouth than them denying you, because you want to go with that company and be like, well, wait, I want to stay when I can't have something, I want it more. And I think that's kind of a strategic piece on top of it just means that you're no longer a fit for that carrier. The other piece is it could be nothing to do with you. It could be just the location that you're in. They've decided to move in a different direction and it's too much of a risk for the entire company. And when that happens, you're just going to get a non-renewal. The frustrating piece is you usually get it about 30 days or less in advance. That leaves you with very little time to start shopping and finding a better rate or a better company that is focused on that area. There's a ton of insurance companies out there. Most of them are a broad range and they want to work with specific locations, specific people. That's why we say you have a profile and your insurance score, all of those pieces mix into one piece. And then we shop it. We look at the different companies that are a good fit for where you're located, your score is at, where the cars are, what's your risk, your claims, all of those things that make up that insurance piece, then it finds that right fit for you. Finding the right fit is one of the huge benefits because now you don't have to worry about it. You can go 2, 3, 5 years without having major increases, without having to constantly call your agent and figure out what's going on. Unfortunately, with other people, it's when you're getting dropped can be an issue. The seventh mistake that people make is going cheap. And I really wanted to say not necessarily going cheap, but cheap is what makes this seventh piece become the issue that it is going cheap usually means I want full coverage, but I want a cheap deal. Don't get me wrong, agents will let you purchase the cheaper policy. If they're a good agent, they'll recommend what you should carry so you at least know what you're talking about or what they're suggesting, and then you can choose the cheaper option. That's perfectly fine. That doesn't make you a bad person. It just means you're trying to fit it in a budget. But when you go cheap, you're going to find that there are coverages that aren't covered on that policy. There's limits that are lower than what you should be carrying. There's a whole video I'll link at the end that goes over the specific limits that you should carry and at least what most people carry on a policy. That way you can get an understanding of what those options are. There's specific states that have specific rules. For example, in Michigan, they have 3 different levels of collision. So if you have a broad form, a standard, and a limited, a lot of people don't realize that buying that limited makes it a lot cheaper, but if you're at fault in the accident, you're not covered. So be careful of what policy you have and what coverages that the agent is giving you to fit in the budget that you're looking for. The 8th is probably one of the biggest pieces I see where it causes the most frustration. It's your billing. Your billing gets screwed up all the time, and it's because of a few things. One, if you make changes, sometimes your billing can skip a payment. That happens actually more often than you would expect. And it's nice because you don't make the payment, but you don't realize that you didn't make the payment. And then a month later, you owe 2 payments. Now, there are ways to fix it. Most agents can annualize or equalize those payments so that it's now monthly even across the remaining payments, but it still feels like an increase. You just really skipped a payment and you lucked out, but now you got to pay it back. The other part with billing is it can get tripped up a few times because most of this is digital. This is technically the AI, but they've been doing this for decades. Their automation system that they've created for billing can get tripped up on different changes that are made. So just be careful. If you're making a change on a policy or if you notice that the bill didn't pay, talk to the agent to find out what happened so that you can get it fixed before you realize that you owe twice. Even though it's the right price that you're paying, it's going to feel like it's not. The 9th is not as big of an issue as I always thought, but there are a few complaints online that is what we call the backfiring. It's essentially the backlash of your telematics. Telematics watches your driving habits and gives you a discount based on how well you do. So you say, I'm a great driver, prove it. Put in this device or download this app and let's watch your braking, your speeding, your acceleration, all of those pieces that you would consider a good driver, and we'll give you a score. We'll tell you how good you do, and over every day you can test that out. A couple things. One, there's complications between connecting it to the vehicle with those that get the plug-in device, so much so that even most of my carriers don't even offer a plug-in device anymore, because now based on the phone, you download an app, it can use your GPS just like your navigation would, and it can tell them the speed and all of those things, and it's actually pretty accurate. The unfortunate piece is with some companies, you've got to be very careful. They charge you more if you're not a good driver. So adding the discount, you get 10% off up front most of the time, and then you realize that you're only worth 8% and you lose 2%. So it feels like you had an increase. With some companies, it goes backwards. They can charge you up to 20% more for being a bad driver. And if that's the case, let's just say you forgot about it and you went on a plane and you forgot to go in the app. There's different scenarios that happen. But when you're doing the telematics, one, you should know the timing that you're doing it. Most of them are 90 days. If that's the case, then make sure that you're not getting on a plane in 90 days. Or if you are, you're turning off the GPS, or you're notifying the app that you're not going to be in the car, that you're somewhere else, whatever the case is, and it doesn't think you're driving through the Atlantic Ocean. The other part is talk with the agent to find out if it is one of those ones that rates hard. If you're a rougher driver, you're not going to get that better deal, that better discount than you thought you would. You might initially, but it may take that discount back and add more of a premium to the policy. And the 10th one is the longevity discount. The loyalty, as we call it, is not rewarded as you would expect. I do wish this wasn't a thing, but it is with, I would say, 80% of the companies. They don't really reward loyalty past a certain point. So if you've been 10 years with a company, they've essentially given you every deal, every discount, and they are going to still give you that increase every year. So you're going to see that 3 to 5, sometimes 20% over the last few years of an increase, whether you're a great client or not. Other companies want you to be loyal to them, and they offer what's called a loyalty discount to join them. They'll take the credit from your previous agency or agent and then credit it towards that new one. That's one of the benefits of when you do decide to shop and say, well, if there's no loyalty to me, I've got no loyalty to you, I'll go put that loyalty with another company. Now, if you start bouncing between companies thinking that's going to help, that loyalty resets every time you renew the policy. So be a little bit careful when you are switching companies that you're not bouncing around all of a sudden. Yes, there are some times where you're going to get the cheaper deals, but long term, it might affect the renewal of the policy because there's different levels of coverages depending if they're being changed. The loyalty discount goes away. All those things start to creep up over time. And it's one of those things that I just wish that carriers didn't do. Now, we've got some companies that do give a loyalty discount. There's some companies that have locked customers into an old software for unlimited time. It's basically they've gotten locked into a really good deal. They've got the year-long policy where it used now they switched to 6 months, and they just didn't want to give away that. So that not that every company or carrier is getting rid of the loyalty. It's just that the loyalty stops at some point for most companies. Let me know what your thoughts are. Did you find a frustration that I missed here that is supposed to be a common thing that people don't understand in the insurance world? If you want to learn more about what we talked about, which is what coverages do you need to carry, what limits should you have, because that's going to play a big factor in the price, I've got my Car Insurance 101 that's going to go more in depth. If you're understanding most of this and what we're talking about and you kind of know the coverages, you want to just learn some more discounts that are available, I've got my discount video here that will go more in depth on that as well. I'm Mark with Think Insurance. I'll see you in the next one.